Everyone, and welcome to today's class. Today's class is for our students at all level, including employees working in various business organizations. We are looking at simplifying the understanding of ledger accounts classification. This is a continuation of our previous class where we are talking about the double entry principles of bookkeeping. This is a part of it. So we want to bring this so as to further simplify the understanding of the double entry principle. Because if we understand how ledger accounts are classified, it will aid in our understanding of the double entry principle. So we are going to make use of a diagram. This diagram is to illustrate the classification, the different classification of the ledger account, and then we will take them one after the other. We are advised to take this diagram, look at it very well, do our own sketch so as to use it on our own to try to make more meaning from what we are talking about. We are going to be using this diagram to explain a lot of things, and we are going to take it one after the other. So if I were you, I will make a sketch of my own of this diagram and use it as we go along. Let's look at the diagram. Now, this diagram is a diagrammatical representation of ledger account classification. As we can see, ledger accounts are classified into real accounts, nominal accounts, and personal accounts. These are three major classifications of ledger account. We are going to take them one after the other, and we are starting with real account. The real account is account for assets and liabilities. Account for assets and liabilities. We start with assets, which is further divided into fixed and current assets. So in summary, as we are seeing here, the fixed and current assets are all debit accounts, while the liabilities are credit account. The liabilities are the long and short-term liabilities. Short-term liability is another name for current liabilities, and all of them are what we call balance sheet items or balance sheet account. We will start with the asset. We will start breaking them down with the assets. Now, assets are properties belonging to a business organization and used mainly for the purpose of running the business. This is very important in defining these assets. It's very, very important because we have seen situations where people classify wrong items as assets. Assets are properties belonging to a business organization and used mainly for the purpose of that business. It means that whatever property that you find in an organization, if it is not mainly for the running of that business, that property does not belong to the organization, so it's not an asset, cannot be classified as asset. Now, assets are grouped into fixed assets and current assets, like as we have identified before. Fixed assets and current assets. Fixed assets are properties of the organization that seem fixed in nature, though movable but not handy. For the purpose of this class, we are defining fixed asset in this manner because we want to drive something home. Like I said before, people mistakenly take anything that is a property to an organization as fixed asset or as an asset, simply because they believe that fixed assets are properties belonging to the organization. So anything that is belonging to the organization is their property and therefore is a fixed asset or is an asset. That is not true, because we have seen cases where people are classifying things like stapler, things like calculator, things like tools, office tools, as fixed asset or asset. If you ask them, they say, is it not a property to the company? No, when we say property to the company, we are talking of those assets that are fixed in nature and they are not handy. They are not handy. You can't just carry them along, carry them around anyhow. You can't take them and move them anyhow. That's what we mean by not being handy. For example, plants and equipment, generators, buildings, furnitures, those things are not handy. They are not things you can carry and move around, even though they are movable. So let's go further to understand what fixed assets is. Example of fixed assets are motor vehicle, plants or equipment, furnitures, buildings. Like I said, these are properties to the company that are fixed in nature because they are not handy. You cannot just move them anyhow. So these are what we mean by fixed asset. Things like other things that are properties to the company but are handy are not classified under fixed asset. Those things can be written off. For example, the stapler, calculators, and those small office tools can be classified as office tools and written out completely as expenses. They are not taken as fixed assets. Do we understand? They are not taken as fixed assets. They are properties to the company, yes, but they are not part of fixed assets. They are written off because the amount involved in incurring them is not much and they are handy enough. You understand? You can move them, they can be taken out anytime, unlike the motor vehicle, plants and equipment, furnitures and buildings that you cannot move anyhow. Building in particular is not movable, but every other fixed asset can be movable, but they are not handy. So this is what we mean by fixed assets. And these fixed assets are debit account balances that belongs to the classification called real accounts and are generally referred to as balance sheet items or balance sheet account. So we need to understand that fixed assets in general are debit balances. They are debit accounts and they belong to the classification of ledger account called the real account, which is generally referred to as balance sheet item. They are balance sheet items. They don't appear in the profit and loss account or income statement. We have seen cases where a transaction says bought plant for so amount, and somebody you go and post it as an expenses under profit and loss account. That is wrong. It is not an income statement item or account. It is a balance sheet account. So we need to understand this. Anything fixed assets, those items that are fixed in nature, that are property belonging to the organization, that are not handy, are fixed assets, and they are debit balance or debit account. What we mean by that is that they are debited whenever they come in, or whenever they are bought. Do you understand? Why we use this word is for you to understand. When they come in means when they are bought. So once they are bought, you debit them, and when they go out, you credit them. When we say whenever they are taken out or disposed, it's because sometimes these assets are being disposed. Disposing them does not mean you're selling them for profit sake, for resale. They are not for resale, mind you, because when some of us hear now that they are being disposed or sold, they will think they are like stock that is being sold. No, disposing them here is because when their economic life is completely used, they can be disposed at scrapped value, and when that happens, they become a credit balance. Do you understand? They are credited, meaning that they have been taken out. That's what we mean here. So whenever they come in, you debit them. Coming in means when they are bought, and when they are disposed, you credit them. An example will be if a machine is bought for use in the organization. Once you have this kind of transaction, you debit that particular machine, which is an asset, a fixed asset. You debit the account and credit cash, that is to say, or bank, the payment type that was used in acquiring such equipment or such machine. So that's what we mean by they are debited whenever they come in and credited whenever they are taken out. So I hope this will give us a background of what fixed assets are and how they are posted or treated in the books of account. Like we said before, we are doing this to address the challenges some of us face even at workplace when it comes to understanding these basic accounting principles. I want to repeat, fixed assets are properties belonging to the organization that are fixed in nature, though movable, but not handy. Please take this home. For those of us even writing exam, this is always a confusion. I will give you a particular item that was bought, and you feel that particular transaction is an asset. After all, it's belonging to the company, because you hear that properties belonging to the companies are said to be assets. It's not all property belonging to the companies are assets. Some are, though in real situation they are properties belonging to the company, but they are not assets. They can be classified as expenses. I have given an example. Those items that are handy enough and that their cost, the cost of incurring them or the cost of buying them is not much, they can always be written off. They can be written off as expenses under the name office tools. Office tools. You can classify them as office tools. This includes things like stapler, calculator, pads, uh, sometimes internet routers, and other small office tools. I don't want to call them equipment. Office equipments are things like computer, laptop, inverter batteries, and the likes. Those are also fixed assets. They are classified under fixed assets. There's those small items that do not last too long and that are handy. The amount of money used to purchase them are not much. You don't classify them as fixed assets or assets. You write them off under office tools. You can use the word office tools and write them off. So in that case, they become income statement accounts, income statement accounts or income statement items. They are no longer balance sheet items. It is only those ones that have been classified as fixed assets that are seen as balance sheet items or balance sheet accounts, and they are all debit balances. They are all debit balances. So this is the understanding. In the next class, we are going to be looking at the other classification under real account, which is liabilities. We're going to look into that also and break it down to simplify our understanding. For those of us joining us newly or those who have not subscribed, we implore you to subscribe, and so that you'll be able to get regular updates, regular teachings like this. Our mission here is to help simplify the understanding of bookkeeping and accounting, to help you in your academic pursuit, to help you in your workplace. That is our mission. It is completely free. The only thing we ask of you is to subscribe, share, comment, participate by suggesting certain questions. If you have certain topics or questions to ask, go to the comment section and do so. You can equally suggest topics of importance to you so that we can treat them. We are committed to bringing you a lot of topics, regular occurrence topics that are regular feature in exam situation and also in workplaces, so as to help your understanding of accounting. Thank you for watching, and see you in the next class.